Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is your weekly video newsletter. This week, we're going to talk about San Diego and the affordability score. Ouch. But before we do, make sure you hit that subscribe button, like this video, and turn on that notification bell so that every time we drop a new video, you hear about it first. Let's jump into today's topic. Now, the most recent affordability scores came out for the top 25 and top 100 metros across the United States, and there's little to no surprise that the top four are still the same contenders: San Francisco, Monterey, Los Angeles, San Diego. But there was a bit of a surprise in that San Diego moved up from position 4 to position 3, surpassing Los Angeles for the month of September. Now, San Diego for the month of September had a median sales price of $750,000, which moved it past Los Angeles from the number 4 spot and into the 3rd position from the affordability index perspective. What you should know is that San Diego real estate has had a 20% increase of appraised value from September of 2020 to September of 2021. And part of that drastic move over a short period of time is what helped hurdle San Diego into that 3rd position over Los Angeles. But the other component of the affordability index is median income. And this is where we see some of the dynamics changing when it comes to rates, home values and prices of sales these days, as well as the economic information that we're talking about regularly in these types of videos. Most recently, you see that the median income of San Diego did not increase at the same rate as it did in Los Angeles. So even though you had home prices rapidly appreciating in San Diego, so we have these new highs, you also did not have income pacing that same appreciation as you did in home values. So even though on one hand the cost of money was cheaper to borrow for the last 12 months, thus of being able for people to afford the new purchase price payment, the income increasing at the same rate didn't happen. And that's what caused this affordability index to flip San Diego from position 4 to 3. You know, there are parts of the country that are also on this list that the incomes have increased at a great rate, but the property values have increased even greater, but they're just not as drastic as they were here in San Diego, and that's why they're not on this top 4. It's no surprise that they're all in California. We kind of expect that, but the change of it being in San Diego from 4th to 3rd is really kind of what the headline is you expect it in places like San Francisco. You expect Los Angeles. You're going to expect New York. You're going to expect that. But San Diego is one of these territories where traditionally you don't kind of make headlines for those types of reasons, and in this case we did. Now, yes, this is measured on a month-to-month basis, and it is quite likely that this could return back to number 4 position or fall off the top 4 altogether in the months coming ahead. But right now, in this point in time in our history, this is what it is. Looking forward, there's a couple of things you can do about this if you're in the market right now. Obviously, if you're a seller, you want to try to sell at top dollar, sell at the height of the market, and this is a great time to still do that because there are enough buyers in the marketplace that can still afford. Even though the affordability index might say one thing, what's happening on the grounds and in the front lines may tell a different story. So if you're looking to sell at the top of the market right now, there's still plenty of time to sell between now and the end of 2021, and you still have mortgage rates in an approachable and attainable rate that people can still afford to pay the top price that you're offering right now. The next thing, as we've talked about in other videos, is prepare yourself for kind of a cooling off of the appreciation. Home prices have appreciated and they continue to, but they're slowing down the rate at which they're appreciating. And then you also have less buyers outbidding each other and overbidding one another. So you're starting to see some behavior pattern change connected to the affordability, which the results are showing today in this video, but you're seeing that that's a corroboration of some of the dynamics we described in previous videos, that buyers are being a little bit more selective. So if you are a buyer, I think right now in the marketplace, you can afford to be a little more selective. Your affordability, of course, is tied to your income and how much loan you're trying to take down. And of course, the interest rate that's changing every single day the market's open is going to play a factor on how much you can afford long term, whether you find a house right now and get an escrow, or in December, or in January, sometime further in 2022. That could always change based on the rate and your income. You know, the hope for all of you watching this is that if you are a buyer, that your income continues to increase, or where maybe you only have one single source of income in the house, a second source of income shows up or becomes provided. That would also be a way to help to cross this affordability issue when it comes to buying in this type of market. And the other factor is just a cooling down of the market factors that are in play right now. I do think, going back to the home prices, that we're going to see a little bit of a stabilization as far as pricing in the months ahead. I think this will continue into 2022, so that hopefully this affordability issue will be less and less of a threat to those of you trying to buy. Now, those of you who are looking at this video today and you're coming at this from the place of looking to refinance, obviously that is more of just a mathematical and situational introspection of what's going on with you in your life right now and the needs for doing the refinance and the purposes of doing so. And so the affordability issue is not as much of a direct threat to you because you're not looking to sell or buy right now. But as far as the house prices reaching a peak or slowing down to reach an eventual peak is of great interest to you, because it has a lot to do with your equity and how much equity you have now versus how much equity you might have down the line. That is also a time-based argument for the case that mortgage rates are fluctuating and they're trending in more towards the higher side and going up than they are trending in the downward side, especially as in former videos we've talked about the Fed doing their tapering and the Fed removing themselves slowly from the market that they've been participating in for well over a year by buying billions of dollars a month of mortgage-backed securities, which has helped keep rates low. You know, I know every week when I make this video, we try to bring you something that's salient, that's pertinent, that's relevant to you right now. And we do this in an effort to help meet you where you're at in your real estate and mortgage situation, so that anything that we might be able to advise and counsel you on to make the next right choice when it comes to real estate and mortgage, we're not only equipped to do that, but we can hear you and understand you from what situation you're facing and what you're trying to accomplish, and then understand what are all the mechanics of making those two things and those sides come together. So we hope that today you have gotten something from this video and that you'll be able to share this with somebody, someone you work with or someone that you know and love, a family member or even a neighbor who might need this information. Please let them know something that is useful or that you can point out to them in this video that was something maybe you didn't know about what's happening in housing and real estate and mortgage, so that you can help them advance what it is they're trying to accomplish in the market as well. As always, thank you so much for watching. If you'd like to reach out to us, please feel free to call us, send us a direct message, leave a comment in this box. You can email us, email your loan officer. Let us know how we can help you. We want to help you win in mortgage and real estate from now all the way into the end of 2021. Finish strong, but then look forward into 2022 and forecast what's around the corner so we can help you continue winning and advance all the things you want to have in your life when it comes to real estate. Thank you so much for watching this week's video, and we'll see you again next week.